Hi everyone, it's Penny. I hope you are enjoying Juneteenth and the day of trading. I want to stop in real quick and talk about yesterday's news with CISO Global because it was really big. We've been following this company since about 45 cents, and they just announced that they are launching Checklight cybersecurity packages for professional employer organizations and financial management firms. So these are two verticals with pre-existing trust built in through partnered insurance agency. They now have 2.2 million warm leads. I want you to think about that. That's 1.2 million through their current partners, another million more through resellers. So we need to be asking ourselves, how much of that can they close? And that's a question you have to ask yourself. You have to figure out your own, you need to figure it out on your own. But I'm going to try and be conservative, and I'm going to say, hey, they can close 10%. 10% of that is 220,000. Now, an endpoint is a server, a computer, it's a firewall, it's something you have connected to the internet. I think most businesses have several endpoints. I know they have a client that has something like 600. I don't know what the norm is, but I'm going to pretend that they can close 10% of these warm leads and that each lead only has one endpoint. So we can have some nice simple math. So 10% is 220,000 times one endpoint. That is $5.5 million a month. That is a total of $66 million a year in high margin ARR. So this, my numbers are theoretical, but this isn't theoretical. The infrastructure is already in place. Partners are already signed. So the question is simply, how many can they close? That's something that we're going to find out later in the year. We're going to see as this grows, as this builds. But I want to talk about valuations because you hear a lot of crazy numbers, and some of them aren't crazy. Some of them are, but you need to be thinking for yourself, what's the true value of the company. I think we're sitting at a market cap right around 40 million. The forward guidance for next year is 39 million in sales. So that is basically 1x. We're sitting at 1x. So CrowdStrike, they're sitting at 24 times revenue. Zscaler, 17 times revenue. Palo Alto, 12 times revenue. Even smaller players like SentinelOne are trading around 8x sales. So mergers and acquisitions in this area they're huge, especially for recurring revenue. You see a lot of 10 to 15x. So especially with platforms that are bundled, compliance or insurance tie-ins. So we know that this could become massive. I'm talking about a potential $66 million pipeline, all of my own. This is my own math. This is not coming from anyone else. Remember that your job as an investor is to protect your capital. That means not investing any more money than you can afford to lose. If it would make you cry, it's too much. But also trying to figure out what's the highest and lowest this company can go. So let's talk about this. Today's market cap, again, we're at about 1x sales. This could really unlock a lot. But I want to talk about the technical setup. I'm going to try and make this as quick as possible. So I'm not going to go over a lot of definitions. If you don't understand what I'm talking about, please look it up. It's useful information. It's not everything. I think fundamentals are the most important, but let's look. We've seen a clean trend reversal since May 30th. That short attack, which crushed the price from $1.40 down to 82 cents on over 40 million shares traded. Again, I want to remind you, there's about 32 million shares available in total, and we think we've got about 90% of them locked down. So 40% or 40 million traded in a day, crazy action. I think I can confidently say none of that was clean. So, but instead of collapsing, remember we went from 141 to 82 cents. The company stabilized, consolidated, and is now curling up. So the 5 EMA has crossed above the 10 and the 20 EMA, which is a classic bullish signal. Look it up. The 200 MA is flat at about 97 cents. It's actually acting as support. The RSI is just over 70, which is showing strong momentum building. I know a lot of people sell around 70. They think RSI is too high, but for a momentum stock, I think it's more of a buy signal. I'm not telling you to buy. I'm telling you how I see the signals. Volume has been increasing, 1.2 million on Monday, 1.8 million on Tuesday, and the float remains incredibly thin. So I rely a lot on Fibonacci extensions, and it is just some beautiful math. I'm going to put it up behind me and try and keep my head out of the way. But I'm going to take the move from 48 cents on May 1st. That was our low. We tagged 168 on May 21st, and then we retraced low to 82 cents on May 30th. So that's what I'm building my chart off of. And with Fibonacci, you have certain levels that are standard that you tend to go to. And this is extensions, which is the positive price up. You can also do this with Fibonacci retracements. I think we're moving up, so that's what I'm going to talk about. Here's what I see on deck. I see the 1.0 at $1.86, 1.27, that's at $2.15. We've got 251 on deck, 291, 355, and 460 is the highest that I'm looking at right now. So these are natural extension levels based on past price structures, and that $4.60 target is in play. So if volume continues to build, news follows. In closing, we've got a big sales catalyst for Checklight. Peers trading in the 10 to 20 times sales. Technical reversal looks like it's been confirmed, and Fibonacci target suggests major upside. So I'll be watching it like a hawk. I hope you will too. But continue to dig, continue to get new information. Always reevaluate your thesis. But stay tuned, stay sharp, and happy trading.